Welcome back everybody to episode 5 of the Golden Suite FX mini-series. Today's lesson is going to be about trend lines, and the main aim of the lesson is to show you exactly how I trade trend lines, which has helped me with my entries and exits within the foreign exchange market, which has also had a knock-on effect by increasing profitability. So I'm going to show you today some really cool and very simple tips and tricks. If you haven't watched the previous episodes 1 to 4, make sure you jump on them. It's very important. They're going to help you so much with your knowledge about forex, your risk management, and some little tricks and tips that I shared in those episodes as well. The episodes after this is also going to be some technical analysis, looking at plotting minor and major zones. We're also going to be looking into the importance of the double tap, which is another technique that I like to use. You're going to gain so much from the previous episodes and the episodes that are to come, and they're all going to be on YouTube. So make sure you like and subscribe so you never miss an episode. So let's jump into trend lines right now. Let's get on the screen share. Okay, so let's go back to the Forex Bible, which is the manual that I use to teach my 3-day masterclass students. It goes really in depth about Forex and my strategies. We're just going to take a snippet out of the Bible today, and we're going to look at trend lines. So first of all, we're just going to do a little bit of background on trend lines just for a couple of minutes, and then we're going to jump into the good stuff on the technical analysis and show you those tips and tricks and how you can use trend lines to your advantage. So, okay, trading trend lines. The easiest and most consistent way to trade using trend lines as a confluence is to plot a trend line on our Forex chart and wait for a third touch. Okay, that's now a valid trend line. We would anticipate a trend line break. A trend line break is only confirmed once the candlestick has fully closed outside of the trend line on the time frame you have located your trend on. So if it's an hourly uptrend, you need an hourly candle close below that uptrend. That's a confirmed break. I'm going to show you some examples of this very shortly. For example, on a 1 hour time frame uptrend, you require a 1 hour candle close below the trend line to qualify as a valid trend line break. Okay, so what do we wait for next? Very simply, we wait for an exhaustion. That's when price pulls back. So now that we have a valid trend line break, we do not instantly execute a trade position, as this method of breakout trading is not consistent. We now wait for price to complete an exhaustion. Very important for those of you that have been watching my training and videos for a long time. You know how much I go on about how important it is to enter once we detect exhaustion is complete, because it's at that point when the market's going to turn and move in our favor. So wait for an exhaustion to complete. We'll maximize our RRR, which is risk to reward ratio, and provide a safety barrier for our stop loss location. I will also be going through safety barriers for stop loss in episode 10, which is going to be why most Forex traders fail. I'll be going into that into a lot more detail, so make sure you catch episode 10. On the exhaustion completion, we'll now look to our candlestick patterns as confirmation. Preferred patterns for an uptrend break example are an evening star, high test, or engulfing candle. Don't forget, guys, you've got all of your favorite candlestick patterns, my favorites, which have been proven to work time and time again in your manual. So you can take a look at those, use those to your advantage. Here's an example of an uptrend. So an uptrend, we always plot below. Always plot below. So we've got a high low, a high low, a high low. Of course, we've got higher highs, higher highs. Okay, that is an uptrend. Price is moving up. We've broken out. We've broke this little zone of support. We've come back to retest, and we got a drop. Very clean and clear example of an uptrend. So uptrend we always plot below. I often see people plotting uptrends above. We don't want to see that. Okay, if you've got above and below, that's fine. Just plot in a channel basically, but don't have no line here and then have your line up there, because it's the wrong way around. So uptrend's always below, which of course means downtrend is always above current price. Again, 3 touches, 1, 2, 3, breakout, exhaustion, and away we go. Again, another nice clean example. Now we're going through some more of these examples now on the chart. So practical exercise, which is exactly what we're going to get into right now. So let's jump onto the charts. Okay, so we are currently on USD CAD 1 hour time frame. Now, I'm going to start on the higher time frames. The reason why that is because I want to show you how I use multi-time frame trend lines to my advantage and use them as a guide. So imagine if you go to your daily time frame. Okay, let's zoom right out. Daily time frame. And what we're going to look for here is an uptrend, for example, and then we can use that uptrend for a target. So if we go back in time, this is quite a nice little zone here. Should be January, shouldn't it? Yeah, January 2019. I actually took this trade. So let me show you exactly what I done and how I found this trade. So we can see here, a nice uptrend, okay? Really, really simple. Exactly what this showed you in the examples. Making higher lows, and of course, we're making higher highs. This is a valid uptrend. This is daily time frame. So it stretches over quite a long period of time. We're back in February 18, and here we're up in January 19. So it's a good 11-month trend line there. So it's a pretty strong uptrend. Now, I've done my other analysis on this pair. I'm not going to get into that too deep. I just want to focus on trend lines. Okay, so price broke out of this high, pulled back, came back to retest this high. So me looking at this, I'm like, great. If I look for a short trade, where could my target be? Of course, this uptrend. Perfect. This is why it's so important to use the higher time frame uptrend to not be so consumed with that hour and the 30-minute and the 15-minute time frame. So by using this as this uptrend as my target, I went down to the 4-hour time frame, and I decided, okay, what else is here? What else is significant to me right now? Well, I can actually see a bit of an uptrend coming through here. So I had one entry here from this pair, which is my MS 2.0 strategy. Then I waited for a scaling in opportunity. Now my scaling in opportunity was going to, of course, be a break of this uptrend, a pullback, and then look to catch a drop. So let's see what happens. Of course, my target is going to be this higher time frame uptrend. So a lot of people, I mean, myself included, sometimes I just target the previous lows, which is like here. But if you have got these higher time frame uptrends marked on, you use them as a really nice exit. And I always aim just above as well. I don't want to aim directly on your uptrend because it's just a guide. Okay, so I always aim just above because I want to give myself an easy target. So step-by-step approach, I go to the higher time frame. I'm looking to mark any trend lines as guides, okay? Any guidelines there, any big uptrends, weekly, daily, 4-hour time frame. So now go down to the lower time frame. So now we're currently gone from a daily to 4-hourly, and we found a smaller time frame uptrend here. So now what we're going to do, we're going to fast forward. Okay, so here, perfect. We broke out, we pulled back, we got some really nice rejection there. I took the scaling opportunity there, which is perfect. Stop loss above the highs. TP, never aim directly down like this onto your uptrend. Why? Because price is just going to fall vertical. Price will move. It can go like this, can't it? It can go like this, come back up, go like this. Before you know it, you're over here, which means you're miles away from your TP, and our price has got to break through an uptrend to get to your target. You don't want that to happen. So what do? We simply just move our stop loss just above. Okay? Keep it nice and simple, just above. Just allow for price to move sideways for a little bit, and it's going to help you get a much better target. So here we go, and boom. Just came down, hit my TP. Yeah, that was a great trade. I had a trade from up here and a trade from here. So it was a great trade just by using trend lines and a little bit of support and resistance. That's all I've done. This would have actually qualified as a channel, which is how I took my first entry. Okay, there's something I teach inside the Golden Suite. You can access that course for free for 7 days if you want to. I teach all about these sort of entries and how I find them. So that's a first really, really nice simple example of us using a daily uptrend. So we zoomed right out to the bigger picture. We can see 1, 2, potential third touch, which we got here. You can see we got it there. Then we went down the time frame to the 4-hourly. Then of course, we marked our next uptrend. Once that broke out and retested, what do? We took the trade. So just using trend lines to our advantage of exactly where to enter the market once we retested, which is here, and exactly where to exit the market. And that is all we're trying to do with forex, is looking where to enter and where to exit. So it's very, very simple there. Very, very simple way to use trend lines. So let's find another example. And to be honest, it's been a bit of an example here, isn't there? Like literally right in front of us. I mean, if we pulled this through like this, you can actually see there, we've got this uptrend, 1, 2, third touch broke out, pulled back. Let's go down to the hourly time frame. You see there, just so you can see a bit clearer. See there, look, we've pulled back and then price dropped. So there's plenty of examples to look through. Let's go back out to the daily. Let's find some more examples. And these examples will literally just be everywhere. Let's see if we can find a half decent downtrend example. Let's take a look. So what have we got here at the moment? So we see the prices in a downtrend here. We're making lower lows this time. Lower lows and lower highs. Highs are getting lower and lower and lower, and the lows are getting lower and lower. Okay, that's how we know we're in a confirmed downtrend. We're going to go down to the lower time frame. Take a look at what's going on there. You can see that we've got actually a nice bit of support coming through, which is cool. Is there an uptrend? Well, it's not great, is it? Let's try the 1 hour time frame. Let's see what's going on there, shall we? Data point unavailable. When you backtest, sometimes that will happen. There won't be enough data to support what you're looking at. So what I do there is I will delete what I previously put on, go back to find a data point. I'm quite glad that's actually happened, because it's a massive question I'm asked all the time. When you're going back on the charts and you're backtesting, you go back so far, what do you do when it comes up no data point? Well, I'm about to show exactly what I do. So first we need to go back and find out where we were, which is there, but it's not even going to let us go back in real time to go back. So we have to find another example. It's not a problem. So many examples that I'll be able to find. I just won't go back this far next time. So let's find some examples here. Okay. Let's see where this takes us. So we can see here we've got an uptrend very clearly. Higher highs, higher lows. Qualified uptrend, great. We've actually just broken out of this little resistance level. Perfect. Let's go down to the 4 hour time frame, see what's going on. So 4 hour time frame, yeah, there's a bit of an uptrend going, but it looks like it'd be more valid on a 1 hour. So let's see if we've got enough data to support that this time. We have. Okay, so what do we have here? It looks pretty good. We've got this nice small uptrend coming through here like this. If you look here, we've literally starting. We try to make a little bit of a higher high there, but still making higher lows. Let's see if we can get a breakout on this one. Let's take a look. So we've broken out. You can see here we're pulling back. No entry just yet. She's trying to break out again. So what happens here is price is broken out. Okay, breakout traders are going short. Price comes back, takes them out, and then drops again. It's a very, very classic move. It's called a fake out. It's something that I go into a lot within my mentorship inside the Golden Suite of how to spot these moves. See, we wouldn't have entered a trade here. Did you notice I didn't say, okay, let's go for a sell? Why? Because our confidences were not met. So let's keep going. Now this is looking better. We've broke out, we've come back, we've got a nice side test, we've got a bit of an engulfing candle going on, a bit of a kind of an even star. We can see here that we're definitely finding some sort of level of resistance. So starting to look pretty good now for a short. Now we just use this little uptrend here. We've also got this larger uptrend coming through here which I'm very cautious of. So there's two things we can do when this happens in this scenario. This is one reason why I've actually picked this scenario. It's because one, you don't just say, okay, I'm not going to bother taking a trade from here. I'll wait till this level breaks out, which is going to be a lovely breakout, by the way. If we get a breakout of this little level across here, breakout, pull back, drop, lovely move. Okay. But what we need to say to ourselves is, if we take a trade from here, can we get stop loss to entry before we get to this low? But where are we there? 36.20. This at 35.74. That's at nearly 50 pips away. So yeah, of course we can. So we can take this trade, move stop loss to entry and prices down here, see if we can get a breakout and a pullback, then we can add another trade on. So this is why trend lines are so important. We just use them as a guide always, but also helping us with entries and exits. So we'll just head back to the daily quickly, so we don't lose track of where we are. So you can see here on the daily, we've got 1, 2. Are we going to get a third touch and a retest of this level? Now, if you're not sure how I'm plotting these levels, don't panic. So I'm going to teach you that in the next episode. So go back down to the hourly then. Okay, so we're going to take entry here now. Now, all we've simply done, draw this uptrend 1, 2, 3. We had a false breakout, price pulled back in. She's broken out again now, and now she's showing a rejection. So let's go short. Short, of course, above the highs. That's where we want her. And then target. I would target, okay, just above the trend line. This zone would be enough. Remember, price is going to move sideways. And then we can see where that takes us now. Now, can you see here that price? And this is something that you really need to recognize when you're doing your back testing. And now there is a lesson on back testing, which is going to be episode 7. Price will not always just immediately just push down and completely flop into profit. Okay, it doesn't just tank like that. It can do sometimes, but not all the time. So see how prices pull back a bit? Don't panic. Your analysis is still valid. Price is still below the highs. Your stop loss is protected. Okay, if price does break out to the above and activate your stop loss, so be it. You've risk managed correctly. It doesn't matter. Reanalyze the situation and you'll get it back at a later date. So do not panic if you see a little bit of drawback, because this can happen a lot. So just don't panic. Okay, we've looked at the analysis. We've used all our techniques to get the best entry possible. And then sure enough, it was the best entry, because look, price absolutely dropped. Stop loss is now at entry. As we said, we move to entry when we get to here. Can we get a pullback to retest this level, or are we just going to drop now into profit? Either I'm happy with. So let's see what happens. Nope, straight into TP. Don't mind if I do. Literally straight in there. Well, now she progressed from there. She did come down to the uptrend. There we go. And she finally broke. So what we can actually look at here is, we've just banked on there. Lovely. Go back to the daily time frame. Because it's a daily uptrend, we need to see the daily time frame pull back. Are we going to get a pullback? Oh, we've got a bit of a pullback there. Very nice. So we've got a nice pullback there. You can actually look to take a trade there. And of course, straight into profit. So this technique works really, really well. I mean, what would you have got there? Now, still 250 pips that drop. Perfect. Just by trading a break, pullback, drop. So there's many, many different ways in which you can trade trend lines. This is very, very simple, using the higher time frames as a guide. Then go down to the lower time frames, finding your inner trend lines, and then of course using them to your advantage for entries and exits. So that's how we can use trend lines to our advantage, just using the higher time frame trend lines as our guide. It's really, really important that we note them down all the time, especially if you're a day trader. Then go down the time frames and then mark on your smaller trend lines, and then you just start working through like that with your other analysis, with the minor and major zones that I'm going to teach you in the next episode as well, and it will all just glue together, and that's when you start to see the results, because you know exactly when to enter and exit the market. So I hope you all enjoyed this episode. Make sure you like and subscribe, and I'll see you in the next episode.